Let me ask you a blunt question. I had Stanley Kulichev of Aave on the show in 21, and he's obviously built something amazing. Aave's been super successful, but it's how you can lend, assets via smart contract in a decentralized fashion. The dream of the Ethereum that became a reality kind of in DeFi summer of 2020. When am I going to be able to do that on Bitcoin? When do you think I can go in, plug in my Bitcoin, lock it in, get some yield?
Well, you can at the moment.
Right. I mean, on the Bitcoin chain.
Yeah, no. So there's a group who we know well, and we collaborate with them called Liquidium, that allows lending on Bitcoin, right? So they've, I think it's like essentially like the difference is if you're doing it without smart contracts is there's going to be a database element that's kind of a workaround. But then I think you'll get the layer 2 scalings that make that more efficient and better, right? But you are actually able to do some lending on Bitcoin right now. Aave scale, hopefully next 6 months, 1 year. If we think of I think we're in BitFi, we're heading into BitFi summer at the moment.
Okay.
And I think you'll have Aave scale lending. I wouldn't be surprised if you have billions of dollars of lending by the end of this year on Bitcoin.
In a robust way, because one thing when people complained about the bear market and they complained about the FTXs and the Lunas, a lot of people reminded them that DeFi never broke. Like DeFi didn't break. And when Celsius took your money, Celsius did not take your money from the DeFi protocols because that was all locked up in smart contracts. So this new DeFi on Bitcoin, will it be robust?
I think obviously there will be learnings, right? So I think it's the early days of stress testing the system, and hopefully people have learned the lessons. Someone pointed out to me that on one of the centralized exchanges, you can now earn a 50% yield on stable coins. So sadly, I think some of the lessons haven't been learned from that period, but I think the
50. Okay.
Yeah.
Hope it's not a reputable one, whatever that means. Okay.
Well, they're certainly a big one, right? Like you'll know who they are. So.
Okay. All right. So we have to keep an eye out.
Yeah, I think sadly, in the nature of crypto is people don't learn the lessons they perhaps should do. But I'm pretty sure that you'll get proper early DeFi on Bitcoin this year.
Okay. We've been talking for maybe a few months, and I think we might have originally talked and agreed to invest with you before the Bitcoin ETF approval. I think it's very possible.
Yeah.
Now that's been approved. In your mind, how does that change the ecosystem? I mean, we've now seen billions and billions of dollars pouring into these Bitcoin ETFs. Some days it's 14 times the amount of supply being mined every single day. The word is that BlackRock now owns more Bitcoin than Michael Saylor, which is a lot. And that's probably going to continue. How does that change your business, the future of what you're building? The first thing I think about is institutions love a yield-bearing instrument. I worked in fixed income derivatives on Wall Street for a long time. People think Wall Streeters, buy and sell stocks. I mean, most of Wall Street is in fixed income, which are government bonds and securities and things that pay yield because that's what your pension fund wants. All these things want that. I would think they would want a yield on Bitcoin. And I'm curious, what are your thoughts on this development? How does it affect your ecosystem? How does it affect the Bitcoin price as well?
Yeah, no. Well, I think, clearly, I thought it was good luck to come into this interview today, and it was Bitcoin trading at an all-time high.
Yes.
Incredible. I think clearly, you only need to look at the evidence. I think we're up probably 30K or so since the ETF was approved, right? So in a very short period of time, that ability for people to just buy an ETF and have exposure to Bitcoin, I think has proven strong. It's not easy actually to like self-custody your Bitcoin, right? Like if you have even Coinbase that is relatively intuitive, like your man on the street needs to figure out like keywords and like cryptography and even though like we think of the centralized crypto exchanges as quite intuitive in many ways, like I think there's still a relatively high technical and financial sophistication that you need to participate in that. Whereas now, anyone can call their broker and have exposure to Bitcoin. So I think that's great because I think actually a lot of the scams originated because like people couldn't figure out how they could get exposure to Bitcoin, but people should go, hey, smart digital money, I want some of that, and be able to have your Bitcoin ETF. I think obviously like we're on very much like the on-chain area, on-chain experimentation. But like you say, I think what we've seen in all of crypto is kind of institutional style investment vehicles have suddenly driven forward innovation in different ways, right? Because they come in and will really fund use cases at scale. And I think if it's just the crypto hardcore, that's great. And one of the great things about crypto, I think, is it's been like a petri dish of experimentation without Wall Street and without institutions, and it's got to a certain scale. I think obviously those groups bring sophistication and have also had a checkered history. But I think it's interesting that BlackRock or Fidelity or whoever are providing people with less technical sophistication access to the market.
To continue watching the rest of the episode for free, visit our website londonreal.tv or click the link in the description below.